Hey y'all, welcome back to the channel. I'm Tinesha Davis, and I understand for those of you who come here often, it's been a minute, and I don't have any excuses, I really don't, just haven't been super motivated. But in this video, we are going to talk about our mortgage update journey, okay? Now, the last time we did a mortgage update was 6 months ago. It was in April, all right? It's now 6 months later, and I'm not going to make you any promises that this is going to be super exciting. So because I know we're not going to have big dramatic changes, I want to take a look down memory lane for 1 second. Not the way you think. We're not going to recap all of the mortgage updates. What we're going to do is take a look at my history with refinancing, okay? So first of all, let's just tell everybody, those of you who don't know why we're doing this. So I'm on a journey to pay off this house. Why? Because honestly, I don't know too many people who have paid off a home. Why? Because when I first started buying houses, my homes, it wasn't normalized to pay off a home. So therefore, I did not set myself up for the proper success because it just wasn't in my reality that it could even be done. All right. I was under the impression that the home, biggest purchase most of us will ever have, is just something that you will always have for a minimum, the mortgage payment for a minimum of 30 years. Minimum, if not for the rest of your life. Why the rest of your life? Because a lot of times we upgrade homes, we move homes, and we just start our journey over again, right? Another 30-year loan. So because of that, I always felt like a lot of people, can I afford the mortgage payment? That's the way I went in purchasing houses. Can I afford the payment? Okay? And if I could afford a payment, just make that payment every single month. Just make that payment. And resign yourself to the fact that you will have this payment for the rest of your life. It wasn't until I started my financial journey that paying off a home suddenly became realistic to me. Not just realistic to me because of income, but realistic to me because I saw other people right here on YouTube who were doing the same thing, who had successfully paid off their home or was further along on their journey where it suddenly just started looking super realistic. So then I decided, wow, I want to be a part of that too. And because I found it motivating to watch other people like me, I wanted to be a part of that community too. I wanted to lend my voice to that story too and share my home payoff journey, okay? Now, I bought this house in 2009. So no, the beginning of me with this home, it wasn't perfect because again, my belief systems never said that I could pay off the house. So I wasn't even working on paying off the house. I just made my payments. I did not pay anything extra to the mortgage, okay? So when I started this financial journey, I then started educating myself on the best ways that I can pay this house off sooner rather than later, all right? And that was simply just adding a little something extra to the mortgage. Over time, that little something became my norm, and that little something started becoming bigger and bigger and bigger, where sending large chunks of money to the mortgage became normal to me, okay? But some of the other tools that I used to pay off this house sooner rather than later was refinancing. Now, there certainly is an art to refinancing. One of the arts, just to make it brief, is to never refinance to start your loan terms over. I would never refinance for a 30-year loan again. That kind of defeats the purpose. Whenever I went into refinance, I made it plain and clear that I wanted to pick up where I was. Meaning, if I had 24 years left on a loan, start my loan at 24 years, not 30. Okay. Yes, the 30-year restart can look tempting because it's going to look like you have a lower payment, but really you are giving more money to the bank than you need to, and you will never have your mortgage paid off. So the first time I refinanced my house was 4 years after the original loan. So my original loan was 2009. So the first time I refinanced was in 2013. And I went from, oh my gosh, I don't have the original terms of my original loan, but I do know that my original loan interest rate was over 5% interest, okay? So I went from that to 3.25% interest rate. And you'll see here that it said that the loan would mature in 2043 at that refinance. The term was 360 months. The original loan was 500, well, let's back up. This was not the original loan. My original loan had been with another bank. And so then I had refinanced for this bank. Gosh, so this was actually 2 refinances. The balance on the loan was $543,852, okay? But when I first started this journey and when I first did my first refinance in 2013, I was not on a mortgage payoff journey. I wasn't. I was just on a journey of get a lower interest rate and have a lower mortgage payment, all right? So my first mortgage holder was with Wells Fargo, okay? Then I refinanced with this bank. But once again, I was not on a mortgage payoff journey, nor did I understand the art of refinancing or the art of paying a house off early. The first thing I was looking for was just to have a lower mortgage rate, right? So with this refinance, I did refinance for another 30-year loan. I did not refinance for the balance that was left on the loan, okay? So this was in 2013. So this was before my journey because I actually started my financial journey when I started this channel like around 2016, 2017, okay? My mortgage was $3,170 a month. Then 7 years later, I refinanced again. And we can see that I did not refinance for 360 months. I refinanced for 279 months. So again, that is negotiable. I refinanced $372,728 and I refinanced for the interest rate of 2.75%. My mortgage went from $3,170 a month to $2,582 a month. So then about a year later, I did another refi. And on that refi, that's when I actually dropped my escrow. And escrow, for those of you who don't know, is when the bank pays your taxes and pays your insurance. So I wanted to separate that from my mortgage payment and handle that myself because I saw no reason for the bank to do that. Plus, when the bank holds your escrow, they actually hold like a cushion in your account. So they actually require more from you than what the actual bill is. And so when I refinanced, like the year after that, I refinanced from 2.75% interest rate to 2.25% interest rate. And my payment went from $2,582 a month to $1,536 a month. Now, while I don't have evidence of the escrow breakdown back then, and we do know that taxes and insurance have inflated with the cost of living since then, currently, I put aside about $650 a month for taxes so that when the tax bill comes up twice a year, I'm always ready. And my insurance for this home is $255 a month. Now, with all that being said, let's take a look at what I owe on this house now. Okay, so we saw that back in 2013, I had owed $543,852. Okay, that was 2013. I bought this house in 2009. All right, so I owed more than that originally. And I was going to pull my original loan papers out for this video, but I didn't get around to that. And we're not going to go hunting for that because I've been putting all of this off for too long. Okay, so now let's take a look at where we are. The last time we did this was in April 2025. So in May, I made my regular mortgage payment of $1,535.91. We're going to round that up to $1,536. And of that, $180 went to interest and $1,356 went to principal. I then made a principal only payment of $644.09. Then in June, I made my regular mortgage payment of $1,536. And of that, $176 went to interest, $1,359 went to principal. I then made a principal-only payment of $2,640.34. In July, I made my regular mortgage payment of $1,536, and of that, $169 went to interest, and $1,367 went to principal. I then made a principal-only payment of $632.84. Okay, and let me say, you guys know that on this journey, I had changed jobs. Then I got laid off from my good government job. Then I got another job. But because the rumors, the word, the reality is positions are still being cut in the government, I stopped feeling like it was the wisest choice to send big bulks of money to my mortgage, because right now we're living in uncertain times. So therefore, in the past, a lot of you who have been following my journey know that I have been putting $2,000, $3,000, $5,000 extra a month on the mortgage. So I made a conscious decision to not do that and to instead put that money in my high yield savings account and let it sit there just in case, right? So it's just in case, it's there, and right now it's making about 4% interest rate. That's 3.65% interest rate plus an additional bonus. So it brings it to about 4% interest rate a month. And I'm just kind of letting it be there in case I need it, in case government layoffs hit home again. And if not, the money will be there to go on this mortgage. So I made a sub bucket in my high yield savings account specifically for the mortgage payoff journey. So that's where the money is sitting. But again, if I end up needing it for my life, that's what it's going to be used for. But if not, if this storm passes and I'm still employed and all is well, I will then use it and put it on this home, which is what it was intended for. Okay. So I have made the decision to put smaller amounts of money to the mortgage. And so this brings us to August. In August, I made my regular mortgage payment of $1,536. Of that, $165 alone went to interest. And let me pause right there. $165 went to the interest on my house. My high yield savings account brings in a minimum of $700 a month. Now, we do know that the rates rise and fall month to month to month, depending on what the Federal Reserve is doing. So it looks like we're looking at taking another cut on the rate. But even with the 3.65% plus the bonus, my high yield savings account brings in at least $600, $700. Okay, so only $165 goes to the interest on this house. So I'm actually making more money over there than what I'm paying out on the debt of this loan here. If you're interested in a high yield savings account, now this is one of the regrets I have. I wish I would have had a high yield savings account sooner. My money has been sitting in regular, smegular, degular saving accounts, making pennies, maybe $1, maybe $3 a month for years before I stopped procrastinating and opened up my high yield savings account. Okay. Now remember, I said with the bonus I get is from when people use my referral code. So what will happen is if you use a referral code that I give to you, if you want a high yield savings account, with Goldman Sachs, their markets account, shoot me an email. My email's in the description below. Shoot me an email and I will send you a referral code that may or may not be mine, because they only let us give out, well, they don't let us, but they only give us credit for 5. So I try to also share the referral codes of other people who have sent me their referral codes as well, because they used one that I had given to them. Okay, so if you want that, shoot me an email and I will give you a referral code that will also give you an extra bonus so that you make above what the minimum interest rate is. Okay. So again, I wish I would have done that sooner, but I didn't. And so, like I said, in August, $165 went to interest and $1,371 went to the principal. I then made a principal only payment of $629.09. This left us with the balance that I now owe on this home of $86,000. Okay? I'm super happy with that because what I know is this. Even if I didn't add another extra dime to this mortgage, if I just made my regular mortgage payment of $1,536 every single month from here on out, I would have still paid my house off 13 years sooner than projected. Okay, so I am super pleased with that. Oh, with this, you can tell that I kept my terms pretty as close to the same as possible because you can see the maturing date did not increase by much. It went up a month. So June 2043, and then it was like July 2043. Normally, when you refinance, you're going to see that maturing date add years onto your mortgage and not just like an extra month. So that was intentional. But again, by paying extra on your mortgage, you can even bring that down. My house will not be paid off in 2043. Right now, I am on target. Right now, I am on target to have my house paid off in the next, I believe, 5 years. I believe it's 5 years. See the screenshot, because child, I'm doing this off my phone and I thought I had taken all the screenshots that I needed, but apparently I did not. So yeah, the house is scheduled to be paid off within the next 5, maybe 6 years at most. And that is going to be so that's going to be around 2030, and not the 2043 where we started. Okay, so I am super happy with that. And like I said, that is if all things hit the fan and if things get a little tight around here because of whatever this job industry is doing, y'all. Whatever this industry is doing. I can't even call it anymore. So we're just trying to do things that make the most sense for the current time that we're living in right now. Okay, and so that's where we are. That's where I am in my mortgage payoff journey. Where are you guys in your mortgage payoff journey? For those of you who are on a journey, and for those of you who are not on a journey, how do you feel about a journey? How do you feel about just adding a little something to your mortgage? And then let me say this in the name of inspiration. One of my biggest inspirations is my sister and my brother-in-law. They paid off their home, and we actually did a great video with them on their journey of paying off their home. Check out the eye in the sky. They are not high income earners, but yet they did the thing. Okay, and so they are my inspirations, and they are now officially the first people in our family to have paid off their home. I'm so proud of them. So proud of them. And I am hoping that one day I too can join the ranks. All right. So see y'all in the next video. Don't forget to thumbs up. Don't forget to subscribe and talk to me down there in the comments. I talk back. Next video. Peace.